Hello, this is Brian Shannon from AlphaTrends.net. Today is Tuesday, July 22nd, 2008, and the market's closed. The S&P 500 had a very impressive $1.65 gain today, or about 1.3%. We've seen the last couple days that the volume has trailed off here, but it did hold above the 10-day moving average and now punched back up above the not only the 20-day moving average, but the lows that we saw earlier in the year. So psychologically, I think getting back above these levels is pretty important. We haven't taken a look at this in a while, but let's take a look at the VWAP since the beginning of the year. I'm just going to drag this line straight across. You'll see, though, the average price that this market has traded this year is just about 134, so just below that, or just above rather, that declining 50-day moving average. We still are in a primary downtrend, and this is, again, it's an impressive rally, just as this was just as the rally over here was as impressive, and these ones as well. But we have to continue to be very vigilant about what you trade, and be aware that, of course, that earnings are having a large influence, as we saw on the open with Apple this morning. So, I've been saying that I thought it would be healthy if we had a pullback down towards 124. Looks like that's not going to happen this time around. We obviously have some important support right at about 125, and now we've got this 5-day moving average advancing nicely. So intermediate term, we still give the benefit of the doubt to the buyers, and now that it pushed back and made a higher high as well, that's of course important as well, because that lends further strength to the bullish the trends that we're seeing in here. If we take a look now at, let's take a look at a Fibonacci off of the May 16th high. That would, if we were to retrace a third of this downward move right here, so starting from this move down to here, 1/3 of that would bring the market up to about that 129 and a half level, and that would, 129 and a half would be right about here. So we're still in recovery mode, but overall we're of course in a primary downtrend. But obviously it's starting to act better in the short term, and that's what pays. Look at it, how strong it was here into the close in particular. That last, the market was above the daily VWAP pretty much all day. Tested it here late in the day, tried to shake some people out. Sellers weren't getting involved, and we had a push on volume back above that level, consolidation, and then it squeezes shorts pretty good here into the close. So very positive session for the spiders today. A lot of that has to do with the fact that oil did continue lower. We've been looking at the 106 and a half, 107 level, saying that this prior level of support had the potential to act as resistance, and in fact that's where sellers were found once again here. So this uptrend line was broken after the fourth test. That's something we observed last week, and then it came down, broke below the important level of support, and that support now acting as resistance. So very encouraging as far as the fundamentals for our economy. And the downside's getting a little extended here in the short term. Within is still a market where we see a rising 50-day moving average, but clearly the short-term momentum remains lower. If you're short, I think the worst case stop probably ought to go right up above about that 106.80 or so. Getting back above this level, then I think that we could see a little bit of a short squeeze rally. But very impressive. If you look at this downtrend line too, keep an eye on that. That might even want to be where you put a stop. I had said that gold was improving, and it looked like gold might be setting up for a rally, but that if it got back below 93.95, then all bets off. And this market gapped open today, was met with pretty much immediate selling in here as it stayed below the daily VWAP all day long. So gold sold off pretty hard, and now it's looking like it's going to retest, or it's retesting this prior level of resistance here near 93 or so. And I'd say stay away from gold for the short term at least, because as you can see, this sell-off came with some volume today, and a lot of money moving around, macro-wise, as far as money coming out of oil, coming out of gold into the dollar, that sort of thing. That's not my objective to observe all those, though. So the relative strength leader continues to be the Russell 2000. This market, of course, failed to make the lower low down here, and it's just been charging nicely higher here. It's coming up to that declining 50-day moving average, as well as the level from where this most recent breakdown began, really. So look for the potential for this market to kind of start to consolidate a little bit here, but no signs of it as it closed very strong. The market cleared that 68 level, then it cleared this 70 level. It just is making a beautiful pattern of higher highs and higher lows. If we look at the 30-minute time frame, you would now expect there to be some support down near about 69.5 or so. Just a real nice recovery in the Russell 2000, and the relative weak group continues to be the NASDAQ 100. Of course, Apple came out with earnings yesterday and it sold off in reaction to that. And when Apple and Google are selling off as hard as they are, and Apple recovered quite a bit, but the stock still looks to be broken here. It could recover, of course, but impressive the way it came back intraday. Google still remains the weaker one of those, and we've still got a lot of big companies reporting earnings, so we're not out of the woods yet. But this Nasdaq is resisting further decline for now as far as the lower lows go, and we saw a very nice reversal intraday where the market gapped lower. It found some buying initially. We had seen that the buyers were becoming more aggressive here by making these higher lows, and it finally broke past this level of intraday resistance here. This little trend line also acted as support, and then a very strong close at the end of the day as it came right back up to this 5-day moving average. I wouldn't be too concerned about the location of that moving average, except maybe we see it pull back to 44.5 or so. The key level is still continues to be this 45.23, and we've been observing the potential for an inverted head and shoulders pattern. I said that it was a risky setup. It wasn't likely to occur, but you always have to be aware of the potential for a reversal. And I still think that getting back above that 45.23 is going to be an important event for this NASDAQ 100, because then it'll put it in a position to go on and test this bigger level of resistance at 46. And you could still make a case that we're making that inverted head and shoulders pattern, although it's kind of gotten a little bit too deep on the right shoulder. But still, as long as this market holds above here, and right now in particular above 44, this could be our new higher low on the 30-minute time frame that makes the most sense to protect any longs against if you're trading the long side here. We've still got a big mess. It's got to get up to that 46, and if it can push up through there, then probably we go back and test that 48 level. But a lot of mixed messages from this market. I can't stress that enough with you. When you look at how strong the IWM is, how the S&P 500 relatively is strong. It's back up above these levels. So a lot of mixed messages. Just continue to trade with a strong defense,